Hey, what's up? Austin, the money here. We are starting to see that weakness in technology. Technology is down almost 1% on the day. And just because the market's down does not mean there are not winning sectors in the market. So we are just seeing a simple market rotation. I think what we saw today, that massive sell off we saw right when the market opened, personally, I believe that's just big money taking profits from technology and putting their money into lower valuation sectors. You know, these are your more defensive sectors versus your risk on. Like, economy is doing great, risk on, you're going to go into technology and consumer discretionary. Your risk off, energy, basically all this right here. So personally, I will not be trading technology anymore. I at least want to see some more data. I would like to see the new CPI report that comes out September 10th, and I would like to see the new PPI report that comes out September 11th before I even thought about trading technology. Keep getting all these rumors like, hey, we're in an AI bubble, and it's possible we could be in an AI bubble. You don't know, right? It just depends. If demand slows down for AI and NVIDIA, AMD, or whoever has to start cutting guidance because the demand is slowing down, then yeah, because these companies are priced to perfection. And honestly, that's the problem with most of stocks right now. Everything is priced to perfection, right? The market has priced in 3 rate cuts for this year, which there's only 3 more meetings left for the Fed. So that would equal a rate cut in each remaining meeting this year. And honestly, I see that as an unlikely scenario. I think after that PPI report came out, I would say the Fed is leaning a little towards keeping rates the same, because the Fed is getting pulled in 2 separate directions, right? You got one side, inflation's creeping up, which to battle that, you raise interest rates. And then you have weakness in the job market, which signals rate cuts to battle that. So they're getting pulled in 2 separate directions right now. And I believe the Fed values inflation more than jobs. So if they're getting pulled in 2 directions, they're going to lean towards battling inflation, because that's kind of their job. Their whole job is to keep inflation low. Ever since I've been watching Jerome Powell since 2022, every single time that guy has a meeting, he says our long-term goal inflation is 2%. He says not 2.5%, not 3%, but 2%. And we were kind of getting there. That's why he started to cut rates earlier this year. We were starting to get there. And now we've started to tick back up because the PPI data came in extremely hot. And that is only the first piece of data that is finally reflecting tariffs. We don't know if this is, just a one-time thing, or maybe a 1 or a 2-time thing, or if this could be long-lasting. We don't know if this is just going to ramp up inflation like it did in 2022, or we went up to like 8-9%. We don't know. Nobody knows. The Fed doesn't know. Nobody knows. I mean, you come to here, S&P's down mainly because of tech. Everyone's taking profits in tech, which is honestly the smart thing to do, considering how overvalued a lot of these companies are. Cough, cough, Palantir. Wouldn't be surprised to see that stock under $100. But let me find. Investors continue to take profits from heavy technology. Yeah. Because everything's priced to perfection. I mean, if these companies have to guide down on earnings, they're going to drop like a rock, because a lot of them are overpriced. I think Meta and Google are pretty fairly priced, but maybe Amazon as well, but Apple, no. Dude, they're growing at like 5%. Palantir, I don't even want to talk about that insanely overvalued stock. Yeah, you get the point. Anyways, yeah, people taking blah, blah, blah. Oh, yeah, Target. If you're an investor in Target, they just got a new CEO who's going to start on February 1st. So I think this is what I want to show you guys. All right, so some of these central bankers expressed concerns about the state of the labor market and inflation, though most agreed it was too soon to lower rates. Yeah. They generally pointed to risk to both sides, emphasizing the upside risk to inflation and downside risk to unemployment. So, majority of participants judged that the upside risk to inflation as greater of the two risks, okay? Which means they would be leaning more towards a rate steady or possible rate hike, which is the complete opposite of what the market is pricing in. The market's pricing in 3 rates cuts like the whole world is just going to heal and everything's going to be fine. But if this inflation, if we get a bad report on September 10th and September 11th, I would be willing to bet money that the market will not be pricing in 3 rate cuts anymore. Maybe 2 or 1, but they're not going to be pricing in 3. It's perfect, right? The market's just priced to perfection. If some bad data comes out, it's gonna hurt the market a decent amount. So basically, Powell's language is a little more hawkish. And if you don't know, when stocks fall, it tends to be always led by tech. Tech is always the first thing to fall, and it's the first thing to recover, right? In a bull market, tech leads, and in a bear market, tech leads. So if you've already, I've already taken a lot of advantage of these tech stocks. I'm not willing to give back my gains. All right. So I think right now I'm sticking with healthcare trades just for short term. Each week I could change, but this week definitely I just got into some healthcare trades this morning, which on Saturday I'm gonna try to get videos out every Wednesday and Saturday, but on Saturday I'll go over the trades. Hopefully everything goes good. But this also will probably be my first losing week in trades. I made some Google trades earlier in the week that I decided to close out because I did not want to be in tech. I don't know why I opened Google, to be honest, but I did, and I closed it out, took a loss, but we're trying to gain back the majority of that loss with healthcare this week. So that's basically that. Go to the Qs. The Qs has fallen almost to the bottom Bollinger Band on the daily. If we check out the 4-hour chart, we did dip down below, bounce right back up into it. Go to the 1-hour chart, and if you see, we really crushed. Like, the reason we saw the relief rally is, the RSI got down to 13.3. The RSI got down to. That is extremely oversold. And in my opinion, this right here is profit taking, and this is just a dead cat bounce. You're just seeing a little relief because the RSI was extremely oversold. So that's just a little relief in my book. Definitely cautious still in this market. This could be the beginning. I'm not trying to predict anything. I'm just letting you guys know that I am personally cautious, which is why I'm not trading tech anymore. Even though tech does have the good premiums, I'm still cautious. And the VIX, the VIX is up less than 1%, which is crazy. We spiked to 17 and dropped back down to 15.6. VIX got, overbought. So, yeah, out of the Bollinger Bands, came right back down into the Bollinger Bands. I'm telling you, man, that data that comes out in September, that's going to be pretty much, I think, make it or break it data for a rate cut for the September meeting. If we miss expectations again and come in hot, I believe they keep rates the same. Even though I think on that betting market, there's like a 14% chance that we keep rates the same. I think it should be higher than that, to be honest, because they're more focused on inflation than jobs data, which, to be honest, I think inflation is probably more important than the two. That's kind of their job. Their whole job is to handle inflation. That's their job. Their job is not to worry about the job market. It is a little bit, but inflation is their main goal. And if they lower rates too soon and inflation skyrockets, then we all just lose faith in the Federal Reserve, and we go back to the 1980s when that happened. The 1980s recession, boy, that was rough. That was a rough time to be in. Inflation skyrocketed to, I want to say it was like 13% or so. Absolutely brutal, nasty. It was not a fun time to be in. But yeah, guys, this is where we're going. So just if you're in any tech trades or anything like that, be careful. Do your due diligence. Definitely keep an eye on data. I will try to inform you guys as much as I can. But next key data is going to be September 10th and September 11th. That's what I'm waiting for before I touch technology again. And I'm sure that's what Jerome Powell is waiting for, and the rest of the Federal Reserve members. But we will see. We will see. Hopefully you guys are not down too much money. I would assume most people are down money today. But, don't be surprised if we see a 5 to 10% little pullback. But on that note, I'm going to head out. Peace.